Could you tell us your name and your organization?
Sure. Ted Koenig, CEO, Chairman, Monroe Capital.
Ted, it's really great for you to be here in Abu Dhabi. You guys recently opened your office in Abu Dhabi. What led to you to opening an office in ADGM?
We looked in the region. We looked at Dubai, the DFC, and we looked here, and we thought that Abu Dhabi would give us a little bit better coverage, as well as many of our limited partners were based here. So we thought it'd be a good starting point for our region office and our expansion.
And what opportunities do you see in the Middle East that are driving your expansion?
Really, the Middle East investors, particularly the sovereigns, as well as the pensions, are starting to understand how important private assets are, private markets, to overall portfolio constructions and return. And our asset class, private credit, probably has been the hottest and largest asset class within private assets for the last 10 years.
And Ted, how does private credit demand and structure in the Gulf differ from the US and Europe?
Similar in terms of returns. Our investors demand a high single-digit or low double-digit return. What they like about private credit is that there's no J curve, there's high DPI, there's very limited risk. We're senior in the capital stack. We're not taking private equity risk. And we've been doing this 25 years at Monroe Capital. We've got a long history in the US with investors, Europe, Asia, and now we're turning our focus to the Middle East.
What types of sectors or borrowers are you mostly targeting in this region? Be more a representative office?
It's primarily to start a representative office. I want to make sure we're close to our clients and we're close to our limited partners. And the only way to do that is to have an office and staff that office with employees. So we're not coming in and out every 6 months or 9 months. I want our LPs to know that we care and we're here for the long term.
And we're an Islamic finance focused podcast. Are you guys planning any kind of Sharia compliant or region specific credit products?
We're actually thinking about it now. We're focused on currently bringing on the sovereigns and a bunch of pension funds into our current funds and SMAs. Saudi right now, we're talking to a couple of large investors about potentially doing something Sharia. That's down the road, but we're going to examine the market and see. Currently, there's no shortage of capital searching out high quality private credit through our normal US fund basis. So that's a to-come decision.
Amazing. What role do you see local sovereign wealth funds here in Abu Dhabi, the UAE, and family offices playing a role in your growth?
I think that this region will probably triple to quadruple in size over the next 3 years in terms of capital committed to private assets. Sovereign wealth funds and family offices and institutional investors in the Middle East are a huge plan in our growth. US and Europe is more mature today. I think Asia and the Middle East are the two cutting edge markets where we'll see future growth in private assets.
Amazing. And just to finish off, Ted, what will success look like for Monroe Capital and ADGM within the next 12 to 18 months?
Just continuing to do what we've done to date. We've had a tremendous run. We have probably a half a dozen high quality clients here. And my guess is we'll probably double that in the next 18 months.
Amazing. What's the best way to find out Monroe Capital?
MonroeCap.com.
Amazing. Thanks a lot.
Okay, thank you very much. I enjoy it, and I look forward to spending a lot of time in the Middle East.
Could you tell us your name and your organization?
Yeah, I'm Richard Banks. I'm one of the founding partners of Soling Partners.
Richard, you were previously on Majlis and Markets, and we're really grateful for you coming on in the early part of our journey. How have things been so far since the last podcast?
Yeah, I mean, the markets here are really changing. We're seeing in asset management a migration away from the old GPLP model to a model of co-GPs. There are really interesting emerging GPs that are based here in Abu Dhabi. And generally, the move is towards one of much more collaboration and co-deployment of capital rather than the old asset manager and allocator model. And I think that's really exciting. And I think Abu Dhabi is a place where that can happen.
Amazing. And we're on the sidelines of Abu Dhabi Finance Week, day 2. How have you found the conference so far?
Yeah, it's interesting. There are a lot of interesting people here. I've been impressed by the number of international delegates. Maybe there are even too many international delegates here. But it reminds me, we were just talking about it before, it reminds me of FII 2019. It's really beginning to get a critical mass, like Abu Dhabi is. And I think that's good for everybody.
Amazing. And what kind of opportunities do you see for private credits in this region, Richard?
Well, what's been really interesting in the conversations I've had in the last 48 hours is the willingness of international credit managers to explore deploying capital into the region. And that this is new. This is something that even 2 years ago, people were laughing about or wouldn't even consider. I've had a number of conversations with some pretty serious credit shops out of the US, out of Asia, and indeed out of Europe, who've all said independently and not prompted by me that they're willing to look at deploying capital in the region. And I think the challenge is finding deals, good deals that are priced properly, and deals at scale.
And Richard, do you think like a lot of the private credit managers are setting up in Abu Dhabi and by extension the UAE are mainly doing it for representative reasons, or do you think they're looking to deploy capital in this region?
I think a lot of them that are set up are doing it to essentially sell product. I think they are finding it hard because it's a very highly competitive market. And if you want to get any of the serious allocators in the region, not just in Abu Dhabi, to pay attention, you've got to bring something to the table. So there is a migration now towards saying, well, what can we do in the region? And they are, at a senior management level, actually quite impressed with both the regulatory environment and the opportunity set that's presented by the UAE particularly, but Saudi's a different story. But the ability to deploy capital is something that is really going to make a difference between those that succeed here and those that don't.
What do you think it would take to originate, structure, and price deals from this region in the private credit space?
I think there's an issue with pricing. I think the good credits in this part of the world, in the UAE particularly, can command very, very tight pricing. So it's not really a private credit opportunity. There's a little bit of a gap there between the larger names, which can command good prices, and the small names, which are SMEs and not of interest to the big shops. So it's how you fill that gap that's the issue. In Saudi, the Saudis still have let's say a reluctance to pay a premium over treasuries that's necessary to get a lot of credit funds interested. I think the pricing is now 100, 200 basis points over the Saudi rate. It's probably got to move out to 400, 500 basis points over to get a really significant amount of capital to come into that market. I think it'll happen. They need them. They need the capital. They want the capital, but the pricing's still a bit off to get to scale.
And what do you think of the role of sovereign wealth funds in Abu Dhabi are playing in the private credit space?
I think they could play more of a role locally. But the same principle is they need to deploy big ticket amounts of money. I mean, 50 million, 25 million deals, it's not going to move the needle for them. So I think it's a combination of government desire to develop that market and understand that market is an important complement to the bank market. I don't think they're there yet with that. I think it's coming. The Emirates particularly is very liquid. In Saudi, I think it's got to develop faster. The regulators, the government, and indeed the borrowers have got to understand that if they wish to tap that type of capital, so outside the bond market, outside the loan market, and look at the private markets, they're going to have to offer favorable terms to the investors. And I don't think they're there yet.
And two more questions, Richard. The first of the world is, what sectors do you think offer the biggest opportunities for private credit in 2026?
So anything that's asset related, asset backed. So infra, I think, is very interesting in the broadest sense. And real estate clearly in Dubai. We've already seen some deals in that space in the real estate sector, in particularly in the Emirates, but also particularly in Dubai. I think, on the corporate side, it's a very mixed picture. You can't sort of take a theme. It's company by company.
And for 2026, what's your outlook, and what do you think the biggest trends will be, both in the region and globally?
Well, I think if the private credit story continues and there isn't a genuine readjustment of the risk appetite, we're seeing tightening of terms on transactions in the US. We're seeing a little bit of a worry about the circularity of the debt trades on AI-related loans. So, assuming that doesn't unwind itself, I think it is a question of there's a lot of money in the sector. It's got to deploy. it's a question of whether we can maintain the underwriting standards and the covenants in order to enable it to be done in a prudent way.
Amazing. And Richard, how can people find out about Sterling Partners?
Just go to our website, sterlingpartners.com.
Amazing. Thanks, Richard. Could you tell us your name and your organization?
Sure. I'm Zongyuan Zoe Liu. My friends call me Zoe, and I'm a Maurice R. Greenberg Senior Fellow for China Studies at the Council on Foreign Relations in New York, and I am also an adjunct professor and a senior research scholar at Columbia University.
Amazing. And Zoe, we're here today at Abu Dhabi Finance Week Day 2. How are you finding the conference so far?
I find it's there are a lot of people. It's very exciting, and unlike the previous meetings, I guess this time I feel the excitement, and I see a lot of people here.
Amazing. And so obviously you're a specialist in China, so I'm really keen to get your thoughts on China and GCC trade relations and political relations and economic relations. So I guess my first question to you is, how is China's economic slowdown changing its approach to global trade?
So the Chinese economy is facing some structural challenges coming from what I describe as the 4Ds, and I write about it. 4Ds start with debt, demand, the demographics, and a decoupling or de-risking. But that does not necessarily mean the Chinese economy is stuck or is in recession. In fact, the Chinese economy, especially in terms of export, has been growing despite the rising trade tension. And as of yesterday, China's trade of goods in terms of export, China's exports surpassed $1 trillion, and that is bigger, almost that is bigger. That is almost the size of Saudi economy years ago, right? So from that perspective, I'd say yes, the Chinese economy is facing structural challenges, but because of the massive industrial capacity that China has built, and because of the profit-killing, huge competitive domestically inside China's market, and also because of the consumer sentiment and the lack of domestic household spending, which basically means China will continue to rely on export, and it will have to continue to find trade partners that are beyond the American market. And this is why GCC as a region, especially UAE, is important. One reason is that UAE's strategic position. The other reason is also because UAE has a lot of free trade agreement with many countries in the world. It's the gateway to Europe and to African economy, and perhaps to Central Asia as well. And then finally, UAE's policymakers are very much interested in becoming the bridge between the East and the West. So overall, I'd say we are likely to continue to see further deepening of China's relationship with GCC country in general.
Amazing. And just leading on from that, Zoe, how has the US-China rivalry shaped China's engagement with the GCC on energy and investment?
I think there are 3 layers there to begin with. The first one is energy transformation, and the second one is related to technology, and the third one is related to how you finance the energy and technology transformation. Right now, the first part, the energy transformation, China almost 2 decades ago started to build its renewable manufacturing capacity. And when in the beginning, China was learning from Western countries such as Germany, but now China already produced the world 80% of solar power. And as of last year, China installed in terms of robotics installation as another 80%. So from that perspective, you think about where China and the region, GCC region, is very much aligned. You see energy transformation alliance. On the one hand, China has been importing a lot of hydrocarbon from the region, from the GCC countries. And then on the other hand, China, as this region is diversifying their economy, especially building renewable or clean energy infrastructure, that's where China's not just cheap Chinese solar panel or EVs, but also the know-how, the technology could also come over, and you see complementarities there. And then in terms of technology, there are 2 aspects of it. The first part is people talk a lot about artificial intelligence, the need there, the potential diversification, the geopolitical angle there. And then on the other hand, you also see a lot of leading AI scientists, they are Chinese ethnicity or Chinese studied, or they were born and raised in China, training in the West. So this is also where the flow of talent combined with the flow of tech and know-how can potentially fit into the GCC China dimension. That is irrespective to how U.S.-China competition is going to evolve. The more that the competition becomes intensified, the more individuals would have the incentive to seek out for neutral places. And this is also where capital would want to seek out neutral places. And this is also the third part, capital. When you think about how economy grows, you have technology, you have resources or capital, and this is fundamentally where this region is very well positioned. Rather than, like, if you think about China as a successful economic growth model, when China was growing, was reforming and opening up in the early stage, China didn't really have abundance of capital. But here in this region, you not only have abundance of capital, you also have global talents. You are also attracting global talent. And then you are also building infrastructure and technology that can support a clean energy power of the future. So this is why I think, irrespective of where U.S.-China competition goes, as companies, capital, talent seek out politically neutral places, the attraction of the region will continue to be very appealing to the rest of the world.
Amazing. Just two more questions, Zoe. The first is, what does BRICS expansion mean for China's long-term trade and financial ties with the Gulf, especially around de-dollarization?
China, within BRICS countries, the trade has been growing, but not necessarily a huge part of Chinese export final destination. So as of November this year, Chinese goods export continued to increase despite its export to the United States declined by about almost 29%. And if you look at direct export, the U.S. market is now only in terms of direct food export. The U.S. now only accounts around 10, sometimes less than 10%, depending on the month that you are looking at, which basically means the U.S., if you only look at a direct food export, it almost feels like the U.S. market is no longer important. Hence, people are very excited about the trade diversification to BRICS countries and through GCC. There are appeals because you have huge population, you have a growing middle class, but these are long-term potential. And the more these countries build trade infrastructure together, the more these countries can overcome their political differences, the more dynamic and synergies that these countries can discover. But in the short run, the U.S. market fundamentally is still perhaps the single most important market for Chinese export, because Chinese goods, even though Chinese goods does not directly go into U.S. consumer market, they become inputs into manufacture facilities elsewhere, and eventually a lot of this flow into U.S. market.
Amazing. Just to end, Zoe, what is the most misunderstood aspect of China's economic strategy in markets like the GCC?
I'd say there are a lot of smart people out there. I wouldn't say people misunderstand things, but perhaps the underappreciated aspect of the dynamics of China and the dynamics of UAE and GCC region is that these are multicultural economies. They are multicultural societies. So unlike Western countries like Europe, or to a large extent even America, unlike these are relatively homogenous societies, these are very diverse. You have diverse culture, you have diverse trend, and you also have diverse companies from around the world. So from that perspective, I'd say do not underestimate the diversity of the economies in the region, and do not think emerging market or global south is just a homogeneous market, because if you treat this region as a homogeneous area, you underestimate the diversity of it, you miss out a lot of opportunities.
Great. Thanks a lot, Zoe.